Happy Tuesday. What do we got on the docket? Let me bring up your screen here.
Well, I was looking at Lyft, and
All right.
I wanted to show you what that implied vol was looking like into their earnings event. It's really high, and they've priced in about $260 at the straddle, almost 260 at the straddle, but they're only calling for a 44 cent move. So to me, that says it might be a good place to sell some options. It is sitting like, let's take a look at the weekly chart. I'll show you that first.
Okay.
You can see that it's, look at, oh, man, you want to talk about a box. When/if this ever does break out, it's going to give folks a really impressive move. Buying these, if you're far out and you're thinking, hey, listen, maybe these guys do get out of their frameworks, it might be a good space. Into earnings, I would suspect, and earnings are on the 10th, I would suspect that what we actually have is a potential iron condor, but those levels up there just are not bringing us much of anything, particularly because we don't have a ton of volume right there. You can see that the traders' open interest is 3,700 at the 15 strike. So they're trying to get folks up and over that edge. If the market makers win, this is very likely where we'll stop. And so if you're thinking to yourself, all right, I'm going to move on the edge of the market makers, then you can do the 15, 1350 / 13. Holy smokes. That gives us 60% of that spread. So this is only a 50 cent wide iron condor, right? It's $15 to $15.50. The credit we get on it is 38 cents. And so that's 60% of the range. Normally we look for 20% of the range in the iron condor. And so if you're somebody that goes, you know what, I'll take 10 lot of these. My downside would be 12 cents, so 120 bucks. But if it works, I'm going to make 380 bucks if I buy a 10 lot. And so it's only going to take $500 of risk, and the reward is way better. And so I actually am going to take this trade. I really like it because the vol is so huge.
So let me ask you, so you were just saying about the volume there. I'm looking at the contracts here, and I see like in some of those, that 1550, there's 6 is this one where you might not be able to get it filled, or you might have to kind of wait this out? Okay.
So I'm going to set it out in the queue and see what gives. But if I can get that as a credit, holy smokes, the delta on this, based on, you know, this crazy model that I'm using, I can't pronounce those Scandinavian names. The delta is 2 that were wrong. So if we can get it, that's going to be something to go after. So I like it. I like it. Even as a 1-to-1, if you can fill it at 30, it might even work. But what we are doing is positioning where the big numbers are sitting on the put side and on the call side. And so, you know, so that's what I'm looking at for February 14th. Now, they report on February 10, so we'll have plenty of time for all of that implied volatility to leak out. If you want to wait until the end of expiry, that's up to you. But if you want to take it at about a 50% gain, That's also very, very sweet.